We talked about Dow too, but specifically, what did we talk about? So Naruto says profit taking on DJI potential reversals. All right. What else? Well, I mean, if it was on Dow, I mean, it might as well be on the other indices as well, since they're highly correlated. Yeah. So if we zoom out, okay, on SPY. Now I'm going to delete everything. Okay. Now I didn't really look at this on Friday. I probably should have, but let's come back. Christian wasn't on the previous live. It's all good. Price was in a range on indices. We were looking to see the lows taken pretty much. Okay. So what we have a couple different things here. If you look at August 16th last year, okay, we have a daily / weekly, did be a monthly high as well, right there at 431.73. Okay. So do you see anything above that? Do you see anything above that high and to the left that would, you know, is there anything important within here? So I'm looking at the high, right? And above it. So what is over here to the left that could be potentially important? Okay. Is there anything from this range here within this orange box up here to down here? Is there anything important there? Because this is going to be an important lesson. Okay. I know it says live price action analysis, but futures are closed. The market's closed. So, you know, I didn't change the name or the thumbnail, but I'm still going to give you a lesson. And it's free too. So it's not going to be behind a membership right now. Neither is Wednesday's video on leadership. That's not going to be a members only video either. An imbalance / gap. The gap, imbalance. Okay. So if we look in this, again, orange area, okay, we do have a lower imbalance here. Yes. But we do have one right here as well. So watch this. Okay. Because this isn't going to make sense unless you do the work, but I'm going to walk you through it. I'm going to hold your hand through it. Okay. So you do have, it will make it, we'll make it like a darker gray, just so we understand that this is daily time frame, because this is going to make a lot more sense when we get into smaller time frames. Okay. So 438.08 and 443.48. Okay. So that is a daily imbalance. Now that goes all the way back to April of 2022. So that's a long time ago, but that's still here. Okay. So we're going to take the orange box off because that was just for me trying to show you the range of what I'm looking at. Okay. Now watch this. Okay. We don't have any other drawings here. Those are the only two. Or three. We have 3 drawings. I don't know what the other one was. Okay. Oh, the high. That's right. Okay. So you know where those lines came from. All right. So now look at it. 431.73. Okay. We trade above that and into what? Okay. We talked about, and again, note taking moment. All right. Totally free. Not, you know, I'm not making it membership only. The chat's membership only. Yes. But viewers can still watch it. Okay. How far can price go above a high or below a low or above equal highs, below equal lows and stuff like that? Okay. I do believe there's more than one answer, but at a minimum, one of the answers that I gave you was that if there is an imbalance above an old high or below an old low. Okay. So do you have that here? Well, yes, this is an imbalance above an old high. Okay. So now when we go into the really small time frames, now things add up a little bit, don't they? Now does it make a little bit more sense why we were looking for shorts? Now, I didn't point that out on Friday, but look at what price has done on a small time frame on Thursday. Thursday, like right in the afternoon. What does it do? Trades right up there. Okay. Right to 44, or excuse me, I don't know why I keep fucking the numbers up. Right up to 443.48. Right? Friday opened. We dropped lower, rallied, dropped lower. We did rally one more time and then sunk in the afternoon. Now, again, I've always said this. I've always been open about this. Friday is usually my worst day. It is what it is. Okay. So even though I was right, technically it did sell off. Yes. But it is hard for me to brag about that because my timing was not great. Because I think I called it, I think right in here, like right in this area. So it did run up one more time before it sold off. Now, however, if you took, not that I would ever recommend taking a live trade based off of what I say. Okay. Not that I would ever recommend that. However, if you did, there was some nice options plays in here. Okay. If you follow SPY, if you look at, I think it was the 23rd, the 22nd or 23rd contract for, I think it was 440 puts. If you don't trade options, don't even worry about it. But I'm going to teach you more about that this year as well. Okay. I'm pulling out all the fucking stops this year. I'm teaching you every fucking thing that I know. Okay. 440 was the strike price I was looking at. Okay. So 440, round number, below equal lows. Again, note taking moments. Okay. Whole number, below equal lows. I was expecting a run below that. So when price was up here at 441.67, I was buying, I bought a put option. Okay. So it did go against me for a little bit and then it sunk and that shit was blessed. Okay. Blessed. Some nice gains in there. So once it went below 440, I went ahead and got out. I wasn't going to hold it into Monday holiday. I wasn't going to hold it into this week. So it was a day trade for that, but that was the justification. Okay. So we have equal lows, right? You guys knew about that on Friday. Dow had the same thing, right? Did it not? Is that not something that was pointed out to you? Those lows right there? What was met just before the close on Friday? That exact price level right before the close. Okay. So look, the idea, and I think we talked about that on Friday as well. How, let's back up for a second. So it was Monday was an update. Tuesday was an update. Wednesday was kind of shaky, but it at least rebalanced price. It's still an up close. Okay. So I did trade lower, rebalance this gap a little bit, and then traded higher. And then Thursday was up too. So the entire week was up. Right. And we talked about Friday being a what? Down day potentially. So you had this gap, or not gap rather, but imbalance. Okay. You had the imbalance on the higher time frame, and you had that day of the week where I told you that Friday can sometimes be a profit taking day. Okay. So when you combine all of that, higher time frame, imbalance, Friday potentially being, I usually call it a profit taking day just because it's, I mean, if it's been up all week, you know, you want to sell it before the weekend, then, you know, it logically, it makes sense for a sell off. But if you don't believe that, you know, if you don't believe in profit taking or, you know, shit like that, you believe in algorithms, that an algorithm moves price. Okay. Well, then what the algorithm do? It rebalanced, or excuse me, it pushed price lower, right? To grab trailing stops then. Okay. Either way, price went lower. Either way. I mean, you can always say, well, fuck it, I'm gonna flip a coin. If it goes tails, I'll short. I mean, you can always be right doing that too, you know, so it just depends. But however you look at it, okay, it still went lower. All right. So that's the power of the higher time frames. And then using the smaller time frames for those entries. Okay. So there was SPY, and then there was the Dow Jones. All right. I didn't really watch the Dow on Friday though. I did later. Like I looked at the close and I was like, oh shit, we went right there. We went right there. So I want to say the Dow may have had a better opportunity. I mean, totally in hindsight, I was trading SPY. You already know that. I wasn't really trading the Dow. But I guess you do have this right here. So this imbalance here, like if you put this imbalance and then possibly this one like together, so instead of one candle, it'd be two. You have that lack of wick right there, at least on a 5-minute time frame. So what I'm saying is this. What I'm saying is that. But what I'm also saying is that lack of wick right there. You see that? So look what price does. Okay. Now this is me. I'm not showing you like what I did. I didn't do this, but I do want you to look at price. Okay. Just look at it and really consider the level of precision here. Okay. Again, I didn't take this. I'm not saying look at my precision. I'm saying look at the precision of this market. Look what it traded to. And then like from here to down here. Okay. What does it do? Price rallies. Okay. It rallies and it just so happens to stop and consolidate right there. And then it just so happens to trade lower and lower and lower, small run, and then straight lower down to these levels. Okay. So that is pretty fucking precise if you ask me. Now this gap is pretty huge. I'll still mark it anyway. If you take Thursday's close and then Friday's open. Okay. It also happens to be within that as well. So you have that opening gap again on the ETFs. All right. ETFs, that opening gap. And then you have this imbalance within that gap. And then you have that lack of wick within that imbalance. So this is a sandwich is what I'm telling you. This is a whole sandwich right here. Now I used to call this idea matryoshkas, where you drop down into like the smaller time frame, but a like concepts, you can do the same shit is what I'm saying. So if you think about it, the gap here is the largest. Okay. So you have that large gap in here, and that might not be tradable for you. You're like, well, John, that's a big fucking range. Like, that's too much for me. Well, I get it. It's too much for me too. Okay. But then within that, you have the imbalance, which is a little bit more refined. So you see what I'm saying? Because again, when it comes to the range, all right, that range right there is 153 points, the gap. Okay. Now this imbalance, the one that I'm telling you, I would put these two together. All right. That's only 62. So we went from 150 or 130, whatever we said it was, down to 62. So that's even smaller. And then that lack of wick just refines that range even a little bit more, down to 23. Okay. Now I'm not saying that's where your stop would have went, but I'm just saying like the refinement. Okay. So does that make sense? For those of you that are able to type into the chat, is what I'm telling you making sense? Taking larger ranges and then seeing concepts within those ranges. It's just refinement. It's all it is. It's refinement. And I'm going to give you another lesson on that on Wells Fargo and McDonald's. Actually, we'll do McDonald's first, because that one's already coming past. I mean, I still have it, but I got rid of most of it. But I'll give you McDonald's. I'll tell you why I think that McDonald's trade I took, I think it was last year, was probably the greatest trade I ever took. Okay. So let's talk about refinement today. I didn't plan on doing that today, but we'll do it. Who cares? I'll have to rename the stream to refinement discussion or some shit like that. I don't know. Makes sense. Makes sense. All right. Appreciate that. Thanks, Nick. Nick dropping gems. All right. So let's go to Mickey D's. Not physically, because we don't want to put that poison in our bodies. We don't want that. We'll trade the stock, but we won't eat the food. You know what I'm saying? You can feel free to write that one down too. All right, we don't have any drawings here. That's okay. So one of the greatest stock trades I ever took. When was this? 2020. It was March of 2022. Okay, so that was this day right here. That was March 14th of 2022. I took this imbalance right there. Okay. And this is why I said it's probably the greatest trade I ever took, because I mean, look at that. That's a wick entry on the daily time frame that ran for over a year and a half. Almost a year and a half at this point. Okay. Now, I didn't buy a lot. Okay. I should have put the farm on that one. I didn't, because I tell you guys not to put the farm. But why that day? Why specifically March 14th? Today, again, is really more so a discussion on refinement. Okay? Refinement. In other words, top-down analysis, okay? McDonald's, I do believe, is part of the Dow. I might be wrong. Oh, no, it is part of the Dow. Okay. That's good. So if you look back to March, all right, this was March of 2022. Big ass candle right here. Okay. What did we do on SPY just a minute ago? We went to the daily time frame, right, to refine certain concepts. I went to a weekly already. I didn't really see shit there. So I went to a daily instead. Okay. So with stocks, just like with currencies and commodities and everything else, they have a monthly time frame. Some people don't like to spend time on a monthly time frame because these candles take a whole month to print, and I understand it's nerve-wracking to wait, but I get it. But after doing this for almost, well, it's been about 9.5 years. Okay, I've seen a lot of shit, and I'm telling you, okay, the higher time frames are important. So watch this. When you analyze this price run from March of 2021 up to January of 2022, okay? That's a big run. Right? The stock went from 206 to 270. Okay. So with that being said, is there any imbalances or, anything that's going to be important to us? Well, right off the bat, there's a lot of back and forth all through here. I mean, look at that. Down movement, up movement. I mean, there's back and forth all over the place here. So immediately my eyes go down here. As yours should as well. Unless you're brand new, your eyes should immediately, whenever I analyze a range or even just pull up a chart, your eyes should just snap right to it, okay? So from 223.28 down to 217.31, that is a monthly imbalance. So that month, if you want to pull up your own chart, I always suggest to do it. That is March of 2021. Okay? Which is an interesting month because I'm not going to talk about it, but March of 2021. Okay? So take a look at that. One candle that separates all of this, like previous 6 months or so, and then that candle separates this entire run here. Okay? So does that make sense? Before we continue, I need you guys to understand. How do we pick certain imbalances? Why do certain candles matter more than others? I'm literally giving you all the fucking details right now. All the details. Why this candle? Because again, look at this. Look at all this in here. You have this range here, general consolidation, at least on a monthly. And then you have all this price delivery here, all this back and forth, back and forth. So the only thing separating all this over here and all of this over here is just one candle, March of 2021. That's it. Okay. So you want to learn how to pick good imbalances. There you go. All right. I just gave you the formula. It's easy. It's not complicated. All right. Now, am I going to try and stay on the monthly and not do any refinement? No, because you're going to ask for some drawdown, and you know, I don't really want that. I don't want drawdown. I don't like it. I'll sit through it, but I don't like it. Okay. It's not always fun. So what do you have? Well, on a weekly time frame, we do have another imbalance here. So we might be able to refine it a little bit more, maybe. But what sticks out to me is going to be July of 2021. So why that? Because look at it. If you look at, again, analyze the price run, right? Same thing. Do we have imbalances? Do we have, you know, whatever you look for? Okay. That's the only distinctive low. That's the only one. You have this low up here, which is like 230s. Well, that imbalance isn't for the 220s. So, you know, that's high up on the range. We're not going to really need it. You have a low here, right? But this low is lower. There was some manipulation there. Okay. So now the only distinctive low that is worth noting is that one. Okay. Is that one right there at 226.42. So we're going to mark that as an area of potential stops. All right. So now, does this make a little bit more sense? It's an imbalance below an old low. Doesn't matter if it's a 1 minute. Doesn't matter if it's a daily, a weekly, whatever. Okay. It's all the same shit. Price is fractal. What happens on one time frame happens on all time frames. All right. So to be honest, I don't remember if I marked up the weekly or not. I don't know if I did, but I need you to understand how we get to these levels. Okay. Why am I buying on this day or that day or below this price on Wells Fargo, for example, or JP Morgan, right? Why do we have these targets? Why do we have these entries? I'm literally giving you a formula to fucking rape stocks. Okay. Like absolute obliteration. Okay. Now, when we go to the daily, now it makes more sense, right? Look at it. Look at those price levels there. If I just went to the daily and just showed you those price levels, 226.42, 223, and 217, it wouldn't make any sense. It would look like traditional support and resistance, random zones, random price levels. You know, you'd be like, what the fuck is going on? But now you know why those price levels are important, right? So now look at this. What was one of the theories I gave you? There was only a couple theories I gave you. Smart money does what? Sells above old highs, buys below old lows. Okay, that was it. Those are the two theories I gave you. Smart money buys below old lows. Okay, well, look at it. Now we can zoom out a little bit. Where's our old low? Right there, 226.42. Okay. Now here's the kicker. Here's the big final moment. All right. That imbalance I told you I bought on March 14th. Where is that imbalance formed? Where is it formed? Below the old low. Look at it. 226.42 is the old low. Where's that imbalance at 224? It's like $2 a share less than the old low. That's discount. Look at this. Look at this massive movement lower. Right? From 270, we drop down, we rally, and we completely sell off. Right? Everybody was losing their shit. Everybody was losing their shit. Nope. I want to buy low, sell high, not panic and fucking sell low and then buy it higher later. That's gooberism. We don't do gooberism here. Okay. Stoicism, maybe, but we want to buy low and sell high. All right. So that right there. Okay. Hey, appreciate the appreciate the donation, Jason. Oh, that rhymed too. You caught the mitigation, correct? No, that was the imbalance here. That was the only reason. Okay. And then you see where it's at now. Right? You see that. I mean, that's massive. I think I sold all of it a little bit later. Or maybe I just held on a small piece this entire time. I really don't remember. But either way, that's the justification. So let me speed run this one more time. One more time. All right. If you ever want to take notes, how do I trade stocks? How can I, get better at trading stocks? Literally, I'm giving it to you. Range, based on the range, that's a discount. Okay. But this is a monthly imbalance. Okay. Buying below old lows, right? What's one of my, where are my watermarks at? I always take them off to take screenshots because they don't, when I scrunch the chart, it fucks them up. What's down here? What's my one down here? My ego, the most egotistical watermark I have, right? It's pinned on my Twitter too. Your stop loss is my entry, right? Because I really trade that way. Okay. This isn't a turtle soup. This is a fucking turtle buffet. You know what I'm saying? You guys probably don't know what I'm talking about, and that's okay. But there it is. Monthly imbalance. Buying below an old low. All right? That was it. It's as simple as that. It's as simple as that. Now, back in September, I didn't even watch this because I would have not enjoyed that. And then it runs, a couple weeks later. But yeah, I mean, I'm just holding it at this point. I'm just holding it now. I have no reason to get rid of it here. No reason. Okay. Now, what I probably should have did was options instead. I should have took some long-term options, but I don't know what I was thinking back in March of 2022. I have no idea. I couldn't even tell you. I can't even tell you what I had for lunch 2 weeks ago. So who fucking knows what I was thinking back then? All right. But, it's refinement. It's taking larger time frame concepts and then fine tuning that. I mean, look, again, not to brag or no shit like that, but I was in drawdown for less than a trading day. Less than a day. That means by the end of the day, we're already in profit. And it never came back to my entry. Never. Come on, man. You don't see very many people out here doing this shit. You just don't. All right. But anyway, Jason, the mitigation that I posted on my community tab, yes, I did. And I called that out too. It wasn't here on YouTube. We weren't on YouTube back then. But because I don't know if you're asking about SPY or not. But yes, I did call this out. That's why I bought NASDAQ. Okay. I pointed that out right when we got there. It spent a little bit of time there. It did. It spent a couple weeks there and I was getting bored. But yeah, I called that out. But I didn't buy SPY. Well, I did. I bought a little bit. I think I bought some stock and then I sold it, I think on February 3rd or 4th. It was like right at the new high. I got the fuck out of there. But yeah, triple Q, same thing. Look at that. Look at that. That is incredible. You hear all these people talking about stocks are going to crash. Oh, president this and that, dimension, whatever. Okay. But look at it. Yeah, stocks look pretty bloody down here. Right. But what's the strategy, guys? Buy low, sell high. Not sell high and buy on the way up. No. At this point, I might get rid of it, to be honest. I don't know. I mean, we did meet a high last week. And this thing's been on a fucking rampage, but I don't know. I think I might just keep it. But that was a justification for long on triple Qs because again, S&P was higher time frame mitigation. Right? So these were definitely long-term plays. I didn't hold SPY that whole time, only NASDAQ. Why did I do that? I don't know. Sometimes I just do shit just to do shit. You know, sometimes I do goober shit too. I mean, I'm not perfect, all right? But I'm trying to give you justification for like just entries that you just don't see anybody getting, all right? You just don't. I mean, I tweet the stuff too. Like JP Morgan, my shit was off. I'm not gonna lie to you. It was off. I tweeted on April 20, I think it was the 27th, because I did mention how we traded into that gap. So I did tweet on that day, but then we came lower and then we sat there for a while. Now we're up. So I mean, you would have taken some drawdown probably, but it's still up. And from that low, like if you bought below that old low, all right, less than 2% drawdown, and it's up like about 6%. Okay. 6% in 51 days. Again, you show me a bank that will pay you anything close to that. And they won't. So entry could have been hot dog water and you still would have been shitting on anyone at a bank. The CDs and ugh. All right. So we're still waiting on JP Morgan, but the whole point is that there was a little bit of refinement there. It's just sometimes my entry just is not as precise as McDonald's. Okay. But now here's the kicker. If you've been with me for a while, I told you that I pointed out that McDonald's trade I took, and I told you to do the same shit on Wells Fargo. Right? April 4th, April 6th, or 5th. I don't know why that got thrown off. Right? What was the idea? You had a gap coming off that low, right? And that gap is here, right there. Okay? It does come back. It did come back into that one more time. Which, again, I told you I didn't want to see that. I didn't want to see it. We did it. But that's refinement. Look at that. Look at that nice run right there. From that gap up to here. I mean, that's a 14% gain in 15 days. 15 days. 14%. Come on, man. Come on. That's major league blessed right there. Major league blessed. But that was refinement. And that was what I was trying to tell you. I was like, Wells Fargo right here reminds me of McDonald's from last year. Because what's the difference? There is no real difference. It's an imbalance below an old low. How do you know what imbalance to trust? Oh my God. I just gave it to you. An imbalance coming off an old low or below an old low. Ideally for me, like the greatest entries are going to be below the old low, but it's okay to wait sometimes for a little bit of movement and then playing a retracement. Like even this one over here, which is totally hindsight, by the way. Like this one, like it's already shown its willingness to go higher. And then this retracement here is an imbalance, but it's already showing, or it has already shown you that willingness to trade above this high. And it would have been late, but that's still a good trade. But I'm saying like, from an overall perspective, where would you rather buy? Because some people would be like, well, John, I don't give a shit if I would have bought that one, you know, or that one. I mean, yeah, either one you would have done well, but it's just that better one was much lower. And that's what I'm saying. It was below old lows. Okay. And that's it. So there is your lesson for today. Knowing which imbalances to trust, higher time frame analysis, right? Top down refinement, right? Refining entries. I mean, dude, you can do this shit on anything. You can do it on index futures. You could do it on, I mean, fuck, we just did it on SPY, that daily gap, and then entering or doing some shit on like a 5-minute time frame. Okay. Yeah. Entry might have taken some drawdown. Maybe. but it still sank. Or if you got in on what I showed you, not at the time, I think it was a little bit after, but we did talk about that imbalance right here. That's an imbalance after 12 o'clock. Oh shit. How do I know which imbalance to trust? Timing. Timing. Guys, if you're taking notes, do yourself a favor and just draw a big clock on your in your notebook. Okay. Matter of fact, don't even use bullet points anymore. Instead of using bullet points, just draw a mini clock instead, just to remind yourself of how important timing is. Okay. There's 12 o'clock. Where's that imbalance? After 12. Coming off of, remember, here's that daily. This whole thing right here is that daily imbalance. Okay. Where's that liquidity? Below. So that'll be it, man. That'll be it for today. So